Good day, investors. This is Manish Shah from Uppercust Wealth PMS covering the market and portfolio outlook for the month of June 2023. Let us see how the equity index performed. Market continued to rise past month from May 23 till date. You can say from 18,380 to around 18,825 as of now, indicating a strong 2.5% up move in a month. The rise can be accounted to lower inflation, where the CPI inflation in May hit a 24-month low of 4.25%. It can also be accounted to RBI and Fed keeping the interest rate steady, with RBI keeping it steady for the second consecutive time, giving it a positive vibes to the markets. Nifty mid cap, small cap index outperformed the parent index by huge margin, where both climbed 5% above Nifty. Among the sectors, Nifty Realty, Nifty Consumer Durables and Nifty Healthcare were the main outperformers, while Nifty IT, Bank and Oil and Gas were the main laggards. FIIs turned net buyers this month and with total net buying of 4 billion USD, while on the other hand, DIIs were marginally net sellers. Indian equity valuation still remains high compared to its emerging market peers. India is at a premium valuation despite being relative underperformer this calendar year. Interest rates globally are elevated levels, and recent event of banking crisis in US and Europe have added uncertainty in the equity markets. Equity market may remain volatile in the near term for these said reasons. Talking about the Indian macros, Indian GDP growth recorded at 7.2% in FY23, above the general estimate of 7%. RBI keep the FY24 GDP growth forecast at 6.5%. Global rating agency Fitch also raised its India GDP forecast to 6.3 from 6 earlier. The real policy rate remains positive. Urban demand remain robust with the passenger vehicles, domestic air traffic and credit card outstanding posing the double-digit expansion on a YOY basis. Two-wheeler auto sales rural data suggests the worst is behind in rural India, but whether it helps making growth more equitable remains to be seen. India's manufacturing activity hit a 31-month high at PMI index of 58.7 in the month of May. The PMI index of India's manufacturing surprised positively. Basically, it rose from 57.2 compared to the earlier month. Indian rupee remained stable this calendar year, and the trade deficit also improved owing to the reduction in the imports and rise in the exports. Talking about the global markets and macros, global economy continue to fight with the recession probabilities, although it has come down from its peak, but still remains to be watchful. Inflation has come down from peak, but it still remains outside the central bank's tolerance band in the countries such as US, UK and Europe. US Fed decided to skip the rate hike this time around, but not all central bank has chose that path. Yesterday, European, you can say central bank, or the you can say they chose to rise the rates by 50 basis points. Canada and Australia also raised the rates by 25 bips and 50 bips respectively. These rate hike indicates that global central bankers are still not comfortable with the inflation and want to keep it under control. The famous US debt ceiling is heard to be achieved, hence that risk is behind us, at least for now. The well-known inverted yield curve is still alive, which have preceded every recession in the past 5 decades. Whether this thing will turn out to be for good or worse, only time will tell. Key events, if we talk about this month, defense sector was the talk of the town, you can say this particular month. India's Prime Minister Mr. Modi's visit to US benefited a lot to this sector, but it was more fruitful to the defense and the other you can say related sectors. Biggest deal that was US's General Electric Aerospace signing an MOU with our Hindustan Aeronautics to manufacture jet engine here in India. Along with defense, aviation sector was also in the news thanks to Indigo's 500 aircraft deal with the French aerospace giant Airbus. US chip maker Micron also announced to set up a $2.75 billion semiconductor plant in the Gujarat, generating close to around 5,000 new jobs. Lastly, talking about our own Uppercust Wealth Fund portfolio performance, our portfolio continues to have a top holding in the companies or sectors such as defense, manufacturing, industrials, railways, and consumer goods sectors. Our top 5 holdings are Hindustan Aeronautics with around 12% weightage, Tube Investments with around 9.7% weightage, Grindwell Norton around 8%, Carborundum Universal and Hitachi with 5% each. Our portfolio performed well in the last month. It has given 6.9% return in the month till date, indicating a 4.5% alpha over the Nifty 500. On a YTD basis also, it has outperformed Nifty 500 with a returns of around 16.7%, generating an alpha of around 5.83% over the benchmark index. We continue to have faith in the investments that we made. We believe we are well placed for the upcoming quarters to make our investors wealthy. Long-term investment with a strong focus and you can say infusion at every few interval would be the key to win this particular market game. So thank you investors. Thank you so much from the Uppercust Wealth team.